Good morning, everyone. How are we doing today? So I got a request from a frequent follower for to check out Jimbo. Here he is. He is 15 years old, and this poor boy was up at 2 a.m. this morning. So I've been up since 2 a.m. with him. I'm gonna go put him down now because he's finally back asleep. There you go. All right, so there we go. Good morning, everyone. How are we doing? So I have a couple of quick questions to go through that were seeded yesterday. Thank you very much. But remember, this hour is for you. It's always interesting to see where these go. First, if this is your first time watching the One Rental at a Time show, welcome. Thank you very much. If you like what you see here, do me a favor and hit subscribe. I'm going to keep doing the countdown until we get there. We're now 84 subscribers away from the magic 10,000 number. So if you want to be a part of the first 10,000, which will be a badge of honor someday when we're more than that, go ahead and hit subscribe and let's get this thing going. So a couple of questions. I got three. Do them in. Why don't we start here? In the Bay Area, I'm getting some questions about ADUs. I had an interview, I think it was 3 Sundays ago, specifically about the Bay Area, where a young lady was talking about possibly adding an ADU, accessory dwelling unit. It is something that was passed for 2020. And people are asking, what do you think the value is? Well, near as I can tell, I've talked to a couple of real estate agents and brokers in the Bay Area. Right now, the estimates range somewhere between 150 grand and 300 grand for the creation of an ADU. Not many have been built yet, right? But I think it's coming. Right now, what I'm hearing when I talk to a couple of local appraisers who go around and appraise, doing a lot of refis and things of that nature today, they don't know how to value them. So I would tell you, anytime you're first, I honestly think, especially in this climate we're in, you're probably not going to get the value out of it. That said, if you're putting up an ADU, your vision is probably much longer than this event, this year or two. So I would suspect once the appraisers have seen a dozen, 20, 30 of these in the next 2 years, I think the appraisals will start coming in. And long term, I would suspect the value of an ADU in the Bay Area, assuming our economy doesn't just implode, it's probably 20%, 25% above cost. But again, I think in the very near term, at least talking to appraisers, they don't know how to appraise them, right? They don't have comps. They don't have these other things. So that's kind of the trade-off. But again, if you're longer term vision, they become more common. The Silicon Valley still becomes the Silicon Valley, and we really do have a supply problem of units and rentals. I think that will turn around. But that's my gut opinion today, talking to agents and some local appraisers, because I have a lot of single family homes in Fresno, and I'm looking at ADUs and see if they make sense. And that's what they're telling me there as well. Another question I got, this really is something I've been talking about for a while. It really came home when Jonathan Twomley and I talked, is that I think the pain that we will look back on in 5, 8, 10 years is going to be in the commercial space, and most acutely, at least in multifamily, will be in the Class A urban areas. So there was a question about would I ever buy Class A properties? So kind of yes, but if you will. I'm very clear, probably to a fault, about what I'm doing in my market. I'm creating my own competition, but that's okay. I'm going to spend the next 2 to 3 years buying as many single family homes as I can as rentals. I believe the single family, especially in a suburb market like Fresno, is going to have a good 2 to 3 year run of appreciation. Kind of go back and look at your market like 03 to 06. I don't know where you are, but that would be the market I'm expecting for Fresno. Fresno, California, 2003 through 2006. maybe 2002 through 2005, but I see good things ahead, which is really odd because so many of these YouTube entertainers are talking about a 2021 crash. I mean, I must get 5 comments a day about housing crash 2021. 2021 is going to be the time. I'm going to buy a lot of foreclosures. And, you know, I'm done creating those videos at least for another couple of weeks because it's just not mathematically possible. Unless interest rates double overnight, it's not possible. Maybe 2022, maybe, right? And again, I'm talking national. We certainly could see some cities get smoked. New York, San Francisco, even Vegas next year could be hurt, but not national. It just, we don't have enough homes already. And what's really going on and really came out in the conversation with Jonathan on Thursday, and I've just validated this morning with some data from realtor.com, the millennials are buying. They're out in force. I did a video with Anna, I think 2 weeks ago, where I posed some questions about 2021. And one of them was, do you envision the owner occupant ratio increasing? Right. I think it's 66 or 67% today. And as I recall, I could be wrong. She indicated that no, she didn't see that changing in 4 or 5 years. And it was one of the few times Anna and I disagreed. I see it going up. And talking to Jonathan on Thursday, looking at some numbers from realtor.com today, this morning, it is pretty obvious it's going to go up. It's going to go up significant points because they are coming out in force. They are leaving their urban shoeboxes and buying space. So back to the question at hand, would I buy Class A, right? So the idea is buy houses now, let the debt structure, let lower rents, let higher expenses, let expanded cap rate hurt multifamily, just like we did in the video on Thursday. Honestly, I'd love to buy some Class A in Fresno, California. I'm still not going to go anywhere else. I'm comfy. I'm comfortable. I don't need to say I own thousands of units. So if I get an opportunity to pick up a Class A apartment, absolutely will. I envision, I mean, it's in the book. I mean, if you've read the book, One Rental at a Time, I'm going to do the same thing that the phase 1 of my book is. I'm going to buy houses, except this time I'm going to do it on purpose with the plan to 1031, assuming it still exists, right? Because there's talk about 1031 going away. But last time it was just a happy accident, right? Tried to buy the houses, bought 8, couldn't buy the 9th. And then, a real estate meetup, a guy said, why don't you go look at apartments? So that's what we did. We went from 8 to 80. I'm hoping to pick up, I don't know, let's say by sometime in 2023, I would like to have 60 to 80 single family homes, somewhere in there. We already have 40 some. So that's what I'm going to do. And, if we can go from say 50 to 500, man, that'd be really cool. I'd like to do that. So yeah, I'd buy Class A if the numbers work. I'm not so class focused, but yeah, of course, I'll buy whatever's the best deal for sure. And then the final one, I got a question from a subscriber and actually a student of mine, who I believe she's buying her first unit right now for cash. So congratulations. The question was basically, hey, with all these moratoriums going on, these rent moratoriums, eviction moratoriums, do you think buyers should limit leverage, right? Basically be even more conservative than I thought, or than I recommend. And then the follow-on question was, how many mortgages is too much? So first off, I don't know that I actually don't know how many mortgages I have. A lot. So I don't really think having mortgages is a problem, especially if you're in growth mode. But so I don't think I think how many mortgages is, maybe there's a second part to that question. I think what you might be saying is how many conservative mortgages, because that's a big thing that I teach and talk about. If you're cash flowing your units, and the more units you have, the less risk you have, because it's very unlikely lots of tenants will decide not to pay. For example, I have 2 out of, whatever it is, 160, 170 that are not paying. So you can obviously move forward with that. So I don't number of mortgages doesn't concern me. Now, what am I doing different because of the rent moratoriums and the eviction moratoriums? I think that's really at the heart of the question. One is um, I am not keen to take over tenant occupied properties. I would rather take them over empty. If the right deal came along, while in escrow, I would run the full process on the tenant to make sure I would qualify him. And if I wouldn't, I won't close. I want it vacant. There's just too much risk today to pick up a house because the tenant always paid and always did this. And, you can doctor up reports to show that they've paid. Um, yeah, that's the one thing I think that's changed in my business. And that's only changed in the last 60 or 90 days. At the start of this, March, April, I probably would have bought tenant occupied because I didn't know how long this would go on. I couldn't fathom it going on till December. And as I shared earlier this week, I could see it being extended till April, which is just crazy. 14 months, crazy. But it could happen. So I just think you need to run your numbers conservatively. I don't mind leverage. In fact, having leverage, you can always call up your bank and get a forbearance. Versus paying cash, right? If you paid cash, you're fully invested, right? There's nothing else you can do to get help. So I guess that's what I would say there. So, okay, those are the 3 questions I had up front. If you asked one of those and I missed it or didn't understand it, go ahead and leave comments on the side. I see there's some comments already here, but remember, this is for you. So go ahead and just start putting your questions in the comment section, and I will do my best to get through them all. If I get through them all and we're done before 9:00, we'll just end. If we keep going till 9, that's when we'll have to stop. So good morning, everyone. We got Ultimate Bargains. Jeffrey, how you doing? Camp Ziggy, great topic. That was from the ADUs, I think. James, let's say you own 4 rentals. Would you still use a property manager? I know you said you would never manage your own rentals, but even if you had only had 4, James, you wouldn't manage a single family home. I don't want them to know who I am. I don't want to get the phone calls. I'm a landlord, a real estate investor because I want time. I don't want to be at somebody's beck and call. So no, and again, I realize I'm very unique in that situation. Lots and lots and lots of people self-manage. Plenty of people that follow this channel self-manage. I've actually interviewed people that have all their units around their 2-mile walk, I think it is, their house. So again, I realize I'm abnormal. You also have to remember, James, I invest 2.5 hours away, right? So I can't walk. I can't even really drive quickly to my units. So I am, we've had property managers since day one, and I wouldn't do it any other way. Hopefully that makes sense. What are my thoughts on the airline industry? Oh, okay. How bad is it? Delta earnings are coming out Tuesday, and so many analysts are bullish. I'm like, what are they thinking? Well, I used to fly. I used to be one of those 100,000-mile flyers. I was that for almost a decade, a couple of years over 200, which is just nuts. I think the business traveler is dead, at least for a while. And let's be clear, airlines make money on the business traveler. I used to manage a team and spend over $100,000 a month on airline ticket cost. $100,000 a month, $1.2 million a year, more, probably like 1.5 a year just on travel. And that's coach tickets. That's not even business. Because again, last minute travel, teams go together, all of that stuff. So I don't expect any good news from airlines. I don't know Delta specifically. I know United, I saw this morning, is expecting a $7.56 loss. I don't know. I mean, so if they expect a $7 loss and you only lost 6, is that good? I guess. I think losing $6 a share sucks, but Wall Street will probably congratulate them because they're burning less cash. I think the airline industry needs to consolidate. I realize I'm probably odd. I don't like the bailouts for the industry. I think what should happen is what I remember happening from the financial crisis. The Fed essentially played matchmaker. I may have these names wrong, but as I recall, Countrywide Mortgage got in trouble. And I think they got partnered up with Bank of America. And then who went with Wells Fargo? Somebody else went with Wells Fargo. Washington Mutual, I think, went to Wells Fargo. I believe the Fed should facilitate mergers. Right now, we have too many planes and not enough passengers. Now, I realize that that's going to cause ticket prices to go up. They should. I realize that will be inflationary. That's okay. I realize there will be less employees. That's okay. That's what creative destruction is. I realize that the airline industry is important for lots and lots and lots of reasons. We just have too many goddamn planes. And we're not going to see air travel back to 2019 level until 2025, 2026. Do we really want to bail out that industry that long? And then you're just adding debt on a company that's losing $6 a share? Does that make sense? I think we can use that money in much better ways. So I'm not a big fan of the airline industry today, if that makes sense. Good morning, James. Thank you. So, Paul, I don't typically talk about asset protection. I don't want to get myself in legal trouble. Yeah, I don't do that. I avoid legal things and accounting things. There are people out there that sell those. I will say one thing that you don't have listed there, Paul, is umbrella policies. That is something that some new investors don't get. They think the LLC is enough. I think an umbrella policy needs to be a part of any investor's stack of coverage. So yeah, I'm not going to talk about LLCs and all that stuff. I'll let the accountants and lawyers do that. I don't want to put out advice that is not right for you. There are so many questions that need to be answered around an LLC or asset protection because everybody's different, right? Maybe you're young and starting out and you got nothing. Maybe you're 50 and you have a huge $1 million stock portfolio. There's different things. Maybe you live in California, but you want to invest in Ohio, right? Different things. There's just so many things to think about. It's impossible to have a meaningful conversation. And then people hear my advice and it's not right for them because their circumstances is different. So I will not be having that discussion. James, there you go. You're welcome. Thanks for all the great content. You're welcome. Question: due to COVID-19, what do you think of Orlando real estate market? Thanks in advance. So this is for Jedi Bunny. So my impression of Orlando is it's one of those hospitality hotspots. It's not quite Vegas, but it's hospitality, right? Vacation. I think it's in trouble. But just like all markets, I think it's the vertical high rises that are in the most trouble. I would guess, again, I know nothing about the Orlando market, but I would guess single family homes with backyards and front yards and garages probably increasing in value. I think it's the urban high rise condos that are in trouble. Think anything with an elevator in 20 floors or more. I think that's in the most trouble. I mean, just think about my conversation with Brian Lebo from Vegas. Single family homes setting records. Wouldn't shock me if Orlando's setting records. However, one of the things that we talked about, I believe it was while we were recording, but it might have been after. I think we were recording. He talked about the Palms and the Palms Resort or whatever they're calling their high-rise condos. Right now, you can't get loans on those properties. So what used to sell for nearly 400 are now trading at 175 because you have to buy cash. That's going to keep going down. And in Vegas, those high rises last time, they were trading at 20 to 25 cents on the dollar. because you had to pay cash, and there were monster assessments because people stopped paying their condo fees. So I think Orlando is a smaller version of Vegas. Single families probably doing okay. High-rise condos, probably a bunch of trouble, in my opinion. Ultimate bargains, Jeffrey. Many years ago, just starting out, I bought a duplex. The seller told his tenants that I now own the building. After that, they were frequent on my doorsteps with nuisance repair requests. Yeah, use a PM. Dude, Jeffrey, typically folks get into the business of being a landlord or real estate investing because they want time freedom. If that's not what you want, if you want to be a low-paid customer service agent and you like talking to people and you're bored, be a property manager. Otherwise, not for me. Corey, if there is a Democratic sweep, blue wave, do you think an even further extension of mortgage forbearance of more than a year will be considered? So first off, I think a blue wave is what I'm calling it, is more likely than not at this point. I think the only chance, again, one guy's opinion, is if somehow the Republicans can keep the Senate, but that doesn't look likely. So yeah, I'm actually preparing my business for a blue wave, and then if I'm wrong, I'm wrong. So I'm preparing for it. I don't think you have a mortgage forbearance again, because at some point, what will happen is banks will stop lending. They'll just stop. The banks need to make money. And if you keep saying buyers or borrowers don't need to pay for like another year, the risk premium that banks will start layering on, we will stop having mortgages under 3%. That could cause a housing collapse. So I think the Fed and the Treasury have done enough to get the forbearance market. I think it's still 3 million people in it, I think, that came out Friday, 2.986, if I remember. So no, I don't think there'll be another forbearance extension. I think it will run its course till March or April of next year. I think the eviction moratorium, as I shared earlier in the week, gets extended to March or April as well. You just can't go longer. I mean, it's 14 months. You're going to crush mom and pop investors. So, yeah, I don't think we have mortgage forbearance much longer. I don't think the banks and all the plumbing around mortgages and how mortgages get sliced and diced can afford another extension, in my opinion. James, what areas in the U.S., in your opinion, of real estate were heavily affected in this downturn? Hopefully I've been very clear and consistent. I think it is what has historically been the most unaffordable urban high-rise markets. Those would be New York City and San Francisco, followed by Chicago, Seattle, Portland. Yeah, that's what I think is going to get hurt. Nobody wants to live in a shoebox. Nobody wants to live in a state where taxes are going to go up if they have a choice. This Cal exit is real. I just saw Graham Stephan is leaving LA after he bought a $2 million house or whatever it is. That's crazy. Must be nice to make $4 million a year on YouTube or whatever the hell he makes, but damn. Yeah, it's coming. Right. So, yeah, that conversation I had with Jonathan Twomley on Thursday, I've been feeling it. I've been sharing it, but to hear him talk about how urban Class A could fall 50% easily, man, that should be eye-opening. So that's what I think. Keep the questions going, by the way, folks. What are your thoughts on investing in those condos while prices are down? COVID will end. When it does, will condo market bounce back? So I believe, Levi, you're talking about Vegas. I think actually, I don't know. Maybe you're talking about Orlando. I actually don't know. I guess I have to answer both. So the thing with condos you have to be very careful of, whether it's Orlando or Vegas, is special assessments or one-time assessments. Again, a lot of these new YouTube entertainers didn't invest through the last cycle, and a lot of condo associations got busted. What that really means is not only did people stop paying their mortgage, but they stopped paying their HOA. Most HOAs have a little bit of reserve put away for that. But boy, month after month after month after quarter after quarter after year, no HOA, they go in the hole. So as an owner, you will likely get a one-time assessment, and then your HOA will be adjusted for the non-payer. So it's very expensive, and you can't plan for it. You really can't budget for it. For example, the only condo I have in my investment portfolio, I bought dirt cheap, like dirt cheap. And it has a one-time assessment on it of $250 when the normal association is $130. So I'm paying an extra $250 for 5 years so the HOA can get back to where it should have been, and then it will fall off, supposedly. So those association fees and one-time assessments can really hurt your cash flow. So if you're going to buy a condo, buy it super cheap. I am not talking 20% off. I am talking 50, 70% off. And at that point, roll the dice. If it's in a market you like and you can visit, go for it. But a lot of folks see condos off 30% and they think it's a deal. Condos will be the definition of a falling knife in some of these markets. It will be bad. Bad. Like the condo I bought last sold for 135, I bought for 27. 20% of the original price. At 27 grand, I paid cash. The HOA I treat like a mortgage. It's that simple. So make sure you get a deal. All right, I rambled a little bit there. Sorry about that. Hopefully that was interesting. About the Orlando market, homes are selling like hotcakes. See? Look at that. Almost like I know what I'm talking about. Thank you, Jedi Bunny. I remember Palm's Place got down to 112 for a studio in 16. Yeah, it's right now, according to Brian Lebo, he told me a studio, I think the last studio traded at 175. And I think that's on the video, so we can go back and check. But he expects more pain. Brian, I asked him after we stopped recording. He said he doesn't expect anything to trade under 100 grand, but he does expect more pain, specifically at Palm's Place. And that's just one of many problem areas in Vegas. Simple Fit Life. What are you doing to prepare your business for the blue wave? Oh, that's a good question. I am buying as many single family homes as I can. I truly believe this is what I expect from the blue wave. We are going to see stimulus like we have never seen before. They are going to take a printing press that is already on high and go nuclear. Not only are they going to do forbearance or eviction or other things like that, they are going to double or triple housing, the housing assistance or Section 8 programs. They are likely going to create a significant tax credit for first-time buyers. So I expect the blue wave to help me create wealth because they are going to inflate my real estate portfolio. It's that simple. I see them. It's amazing. The real estate market is already hot, right? The Orlando comment from Jedi Bunny above is like every other comment I see. I believe the Democrats are going to come in, assuming the blue wave happens, and spend like drunken sailors, including a $1 trillion or $2 trillion infrastructure bill, just on top of everything. That is going to be so inflationary. And again, they're going to fight inflation. They're going to misreport it. But my real estate portfolio will go up 25% in the next 4 years. I own a lot of stuff. So 25% appreciation in 4 years, that does not suck. That's what I'm doing to prepare for it. JK, can you share how you are preparing your business for the blue wave? Oh, good. Same question. Same answer. Don't forget DC and Boston mass exodus. Yeah, DC for sure. I actually haven't heard about Boston, but it would make sense for Boston for sure. Paul, I prefer to always do my own tenant search and screening placement, then turn over to PM. Yeah, that's fine. Yeah, I mean, one thing, I would tell the question earlier today about leverage and moratoriums, and one of the ones we started on that I failed to talk about, but you brought it up, Paul, is this period is all about tenant selection. When you get your application, you know where they work, right? Are they working at a hotel? Are they working at a non-essential business? You look, right? You can make good guesses. One of the tenants I moved into my most expensive house works at PG&E. There's no chance he's going to get laid off, right? At least very little. So you can make those choices. Yeah. I believe good tenant selection is what saved our portfolio. I never appreciated our tenant selection criteria until April of this year. Right in March, we hear eviction moratorium. I go, oh, shit, what's going to happen? Well, good news is we have strong tenant criteria, and it's kind of worked out. We had, thankfully, still just two, but it's $50,000 now across my portfolio that we're late on, which that's not fun. But it's built up over 10 months, so it is what it is at this point. And it's only going to get bigger, thanks to Mr. Gavin Newsom. Better home rental. Great show, thanks. After all these years, I still don't know the accurate definitions of what A, B, C, D. Oh, for single family homes? Typically, well, I guess they apply in single family homes. I would not typically it's a multifamily commercial designation, and really it's age of property. So simply saying, anything built in the last 5 years is Class A. Anything built, 6 years to 20 years, likely Class B. Anything older than 20, maybe 20 to 50 years is Class C. And then, the old 1950s builds or below are Class D. It's typically an age and amenities thing. It's not always that simple and straightforward, but for this conversation, that is often enough. It's people in the commercial space use vocabulary to confuse us. Cap rate, IRR, classes, urban, suburban, tertiary. It's just, yeah, they just do it to confuse us, to make themselves sound smart. Arthur, should I keep buying single family homes in Texas that I pick up for 50 to 70K as BU? Oh, buy it. Probably supposed to be buy and hold rentals, or should I pause still after the election? Well, Arthur, you don't really have what the rents are. I mean, a 50K house, but $100 rent, that's not a great deal. I'm not saying that's what's happening, but could be. I would think if you have a 50 to 70K house, and again, that doesn't tell me the condition, right? You buy a 50K house, but have to put 50K in, that's really a 100K house. So if you're telling me these are 50 to 70K houses move in ready, and they rent for say $1,000 or more, why not keep buying? I would. Yeah, I would. And I mean, I can't believe you're not getting overrun by owner occupants. Maybe these 50 to 70K houses don't qualify FHA and need work. That would probably be my guess. So the question, Arthur, for me is, what's the true cost? 50 to 70K sounds cute, but I've been doing this a while, so I'm guessing that's not your all-in cost. Just a guess. And then I need to know what your rents are. Arthur, thank you. Appreciate it. Jeffrey, oh, where'd he go? What's going on? I always recommend avoiding owning or loaning on an HOA. Too many little, yeah, HOAs are, yeah. Nuclear printing press. Yeah, it's going to get interesting. I like your thoughts on how a change can positively impact your real estate portfolio. A good business person sees opportunities no matter what party is in control. Yeah, absolutely. my job's not to get mad with what's going around this. My job is to figure out how I can take advantage for my family, my little world. So yeah, it's a lot easier to, and you're a lot happier when you do that too. Angel, purchasing rental properties and renting out Section 8 tenants with proper screening is recession-proof strategy. Well, it's very well for me, Angel. 40% of our tenants are Section 8. 90% of their rent shows up on the first or before. So yeah, assuming that the building is maintained, Angel, which is not in your statement, assuming you're doing your job as the owner to make sure it passes their yearly inspection. Yeah. Section 8 always gets its praise and props during a recession because the rents show up, and generally speaking, the rents go up. Affordable housing is a problem of our lifetime. You can't build them. So the only thing that happens is properties age into them. But what has been the most popular investing strategy of the last decade? Value add. So investors like you and I have been buying Class B properties that were slowly going to Class C, and we've been upgrading them, bringing them up to Class A. So the pool of Class C or affordable Section 8 housing is shrinking. It is the problem of our decade. It is why I think the blue wave doubles housing assistance, because affordable housing is a problem of our lifetime. That's what I think. Rodrigo, thanks, Mike. What's the lowest return you would buy a rental? Do you take into consideration appreciation tax benefits when I analyze deals? So my students will tell you, I do not consider appreciation or tax benefits on anything. I want to know how much cash is coming in versus how much cash is going out. Think simple cash flow statement. I've lived in a world where appreciation rockets and crashes. So I don't count any of that. Every market is different. My market today, if I can get a 6.5% return, I'm happy. My market in 2010, it was 15%. So I teach my students all the time, your first job as an investor, if you're taking my course, is to learn your darn market. I don't know what your market is. And just because I say 6.5 doesn't mean it's gospel. You take my 6.5 to Ohio, you're going to buy everything you see. You shouldn't, but that's my market. It's Fresno. It's in California. It's a little different. It's appreciating, growing. It's different. So I tell my students, the first thing they do in the course is learn the market. They create a very tight search. They look at it every day. And then they get comfortable with the math. Then they build a team. And then pretty soon they're writing offers. And it's so much fun to see when they do that. We have a private Facebook group that just for my students, and to see them talk about deals and offers. And most importantly, when they walk away. I am most proud of my students who are hungry for a deal that walk away. That is such an awesome feeling because they know their numbers. There'll be another deal. It's awesome. So hopefully that got it. Tamika, good. I'm glad I answered your question. Oh, where'd it go? There it is. About leverage, you are absolutely correct about the importance of good tenant selection. My PM is working through the process now, buying, vacant single-family homes. Congrats, Tamika. Look forward to it closing and you telling us what's going on. My $25 an hour city didn't load. Oh, I will go look it up. I had to record it 3 times, that freaking video. So I will go look. Actually, let me look at my phone real quick. I had to record it 3 times, so I think a couple of them didn't load. Let me see. So yeah, it's been viewed 128 times. So I think it's loaded now, Mark. I think you probably got a link to one of the first 2 I had to delete because it crashed. So go take a look. It's there. It's Geneva, Switzerland, by the way. It's the answer to the question. How is your business preparing for Trump administration to stay in office and future of real estate? I personally feel he will display a stimulus package that will shock the world. I think if Trump stays in office, we get a infrastructure bill like never before. I think Trump's bill is probably more old school, if you will, bridges, um, railroads, more. I mean, that's just who he is, right? He's a builder. Um, so yeah, I mean, I think we have to. Let's be clear, we have to have an infrastructure bill next year, regardless of who's in office. Um, Another thing with the Trump administration is he's the one that did the CDC edict, which I'm not so happy with. That shocked me, right? He's supposed, or he is not supposed to be, he is a real estate guy. So to see him do an executive order empowering the CDC to stop evictions, that surprised me. I would not have guessed that coming from Trump. So could he extend that further? Absolutely. He could extend that further for sure. So that would be one thing I'm looking at. The other thing with Trump is taxes. I think he is going to cut taxes and encourage investment. I don't see Biden cutting taxes. But I see Trump, if, when, whatever you want to say, stays in office, he will cut taxes, which again will be inflationary. I think no matter what happens the next 4 years, single family homes in decent markets go up. They weren't building enough of them. The population is accelerating growth. Yeah, it's going to be a great 4 years to own single family homes, no matter who's in office. Yep. Buying from a distressed owner occupant. Yep. All right. Good advice. You see, I like students helping students, friends helping friends. I love it. Cool. Cash flow only. There you go. Arthur. Okay, cool. Here we go. The property 50 to 70K needs 10 to 15. So, okay. So now there's 60 to 85. Cool. Move-in ready is okay. 85 to 95. Okay. There are plenty in the right pockets of Texas, just doing buy and hold. Yep. There you go. No reason to stop. There are plenty of markets where today doesn't make sense. But dude, Arthur, if you got it rolling, you're in a part of Texas that's working, why stop? Cash flow is cash flow, baby. Positive return, you're probably getting, I don't know, probably getting a 9% yield on that. Just guessing. Go for it. And only do great deals. Tamika, awesome. Quote in the course. I like it. My accredited friend bought his first property with seller financing, made 100. Yeah, you can 100% cash on cash return. Learning creative financing. Yeah, that's another thing. I really believe, again, this is all these newbies talking about a crash in 2021. They don't realize that there's value in the current mortgages. Unlike 2006 and 7, those mortgages had no value. They were basically nuclear bombs, right? They were all variable. They all had high rates. It was just toxic stuff. But today, a homeowner, 2.85% 30-year mortgage, they're 2 years into their 30-year, that mortgage has value to me. I'm willing to step into that at the right price. Creative financing is going to be, man, so popular in mid 2021, certainly 2022. Yeah, totally agree. Would James, would you consider a duplex a single family home? No, I would not. A single family home is a single family home, and a duplex is a duplex. Duplex is basically, a duplex is 2 front doors, and a single family home is 1 front door. And a triplex is 3 front doors, and a fourplex is 4 front doors, simply speaking. So no. I think what you might be asking is they're residential. So for single family home, a condo for that matter, condo, single family home, duplex, triplex, fourplex are all residential loans. You might be asking that question. 5 and above are commercial. I think that's what you might be asking. But yeah, I would consider a duplex in a single family home residential. Rodrigo, did you see Graham Stephan's video? Yeah, crazy. Leaving California, going to Vegas. Dude, that guy's going to save 300 grand a year in taxes. Guy's printing money. Good for him. Are you hearing anything about senior living communities? No, I'm not really looking. I haven't heard anything. There's a few 55 and older communities in Fresno that I occasionally poke at. But yeah, not looking specifically. FYI, toxic mortgages can be replaced with seller finance note, and then the note is sold to a third-party note buyer, redeem the existing debt. Yep. Toxic mortgages. Yeah, it could be. Yeah. Yeah, lots of creative ways to do it. If there's enough equity and cash flow, right? If there's enough spread between what the mortgage payment is and what rent is, absolutely. Enough equity where you're willing to carry it, all of that good stuff. Yes, you were spot on, 7 to 9%. Oh, look at that. I've actually done this before. Definitely going to continue. Really just wanted to hear your input. I would like to link up with you. What's the best way? I'm in California, investing in Texas. Go to my YouTube channel and send me your email. Subject 2. Yes, subject 2 is going to be a big deal. Subject 2, wraps, all that stuff. It's definitely something I have to learn. Never done one. I will do one in 2021. I'm confident. If inflation gets out of control in housing, how do you prepare existing because everything eventually pops? If inflation gets out of control in housing, how do you prepare? Well, James, you need to read my book. What I will be watching is the affordability index, which is where I will look to see if the market is getting too inflated or too hot. And in my market, when the index gets below 20, I'll sell everything I own. Today it's at 50. So I have plenty of room. But I want to be very clear, and I'll tell everybody on this channel, oh, I'm selling all my houses. Because right now I think my market's like a 330 median. Just doing rough math takes it to like 480 median, given everything else staying the same. But yeah, if inflation runs hot, prices go up, gets to a point where the affordability index is below 20, I will sell everything I own and just sit on cash and wait. Any concern of Biden's plan to eliminate real estate professional classification? Nope. No concern. I think Biden's, if he wins, he's going to change all kinds of stuff. And I think Biden and, oh my God, the blue wave, back to that question, I think they are going to target real estate investors, specifically developers. They are going to look at President Trump's tax return and go, how many of these loopholes can we close? It will be, if he wins it and he gets a blue wave, they will go after real estate developers, in my opinion. James, your book is awesome. Everyone needs to read it. Thank you. James, did you leave a 5-star review on Amazon yet? I need those Amazon reviews. I think we're only like at 287, I think, something like that. Wraparound note is safer than bare subject to. Yes, of course. Yep. No worries. Very, very cool. All right, everybody, this has been fun. It's been 48. Oh, one more question. Closing loopholes will dramatically increase cost and reduce availability. Yes, absolutely. It'll be interesting to see when they come in, if there's a time frame, do they say, hey, 12 months from now? It's going to be interesting. I do believe a blue wave comes after real estate. Airbnbs for single family homes, not my thing. I'm a month-to-month guy. I know I have several people that do Airbnbs and that I know, and they love it. It's not for me. Turnover is what kills landlords, and I don't need the Airbnb headaches. Not for me. Paul, I've already, the lowest return I would accept today is 6.5%. Anything below that in my market is a bad deal. In 2010, 2010, it was 15%. Markets always change. All right, everybody, have a wonderful day. We're going to call it here, and I will be talking to my students in about 10 minutes in our Facebook group. Take care. Bye-bye.